the 3rd of February, the market had opened, and Facebook, nowadays known as Meta, had just seen their biggest stock market crash in history. The stock was down to around 25%. Then you went and checked your news feed and you saw articles like this. But is it that bad? Did Meta slow down this massively that it justifies the 25% drop? Well, let's dig into the numbers. Meta announced their Q4 earnings report on the 2nd of February. But first, let's look at the Q3 report. What did they predict? They forecasted the Q4 revenue to be in the region of 31.5 to 34 billion US dollars, which is around a 13 to 70% increase. And just a side note, the next sentence is an interesting one, but we will look at it just a little bit later. Now, let's jump to the Q4 report. Their revenue growth from Q3 to Q4 was about 16%. And as you can see, they managed to reach their expectations. The Q4 revenue is about 43.6 billion US dollars, which is not bad at all, although they did not exceed their expectations, which looking back at it now is probably a problem. But I don't think this is the biggest one. Now, as you can see under Reality Labs, and if you don't know, they are referring to their virtual reality business operations by that. They made a loss about 3.3 billion US dollars, which is not surprising at all. To be fair, they spent billions and billions over this year. They really do think this will be the future, which is absolutely fine. Although it has a huge negative effect on the next number, which is earnings per share. This is the first really worrying number in my opinion. It was down by quite a lot. From one part, their effective tax ratio was increased from 14 to 19%, which is fair enough. They can't really do much about it, although they stated in their Q3 report that this might happen, so I'm not too sure why they didn't just wait a couple months to spend billions and billions on their virtual reality expenses. This ratio could look much better than this. And because of these factors, their net income was actually down about 8% as well. Although I'm not too sure how big of a concern it is for investors. Now let's dig into some user details. Now there are huge problems. Let's look at their operational and financial highlights and let's compare the Q3 growth to the Q4 growth. Bear in mind these are year-over-year growth, not quarter-to-quarter. Let's start with the family package, so to say. If you're wondering what does family mean, this is just how they labeled all of their main services except the virtual reality ones. So Facebook, Instagram, WhatsApp, and many others are in this category. If we are looking at the daily numbers, as you can see in Q3 there was a significant increase of 11%. Although there was increase in Q4 as well, it slowed down a little bit, only 8% this time. Monthly statistics were even better in Q3 with a whopping 12%, and in Q4 it was 9%. Slower growth, but still significant. Let's analyze their single biggest platform, Facebook. Even in Q3 there was only a 6% increase in both the daily and the monthly users. If you're looking at the Q4 statistics, this was 5 and 4% respectively. Even though Facebook's main revenue is coming from advertisers, not directly the users itself, they still need a constant user growth in order to maintain their high level of revenue. Their chief finance officer gave a speech in which he said the following, I'm quoting, "We expect first quarter of 2022 total revenue to be in the range of 27 to 29 billion US dollars, which represents a 3 to 11% year-over-year growth." So they expect their 2022 Q1 earnings to be lower than 2021 Q4 earnings, and I've heard a lot of people talking about how bad it is. Now, Q4 earnings are always really strong because holiday season. Q1 on the other hand is after holiday season. Typically advertisers don't have that big of a budget, and since Facebook's revenue is highly dependent on ads, it only makes sense that it's going to be lower than the Q4 earnings. But 27 to 29 billion is way lower than what the public was estimating. I think this is another reason why investors got scared and why the stock price dropped massively. Let's go a bit further in his speech, because this is really interesting in my opinion, so I'm quoting. "First, we will lap a period in which Apple iOS changes were not in effect, and we anticipate modestly increasing ad targeting and measurement headwinds from platforms and regulatory changes." Now, if you haven't heard about it, I'm not going to go too in-depth, but just to summarize it briefly, Apple essentially gave an ask not to track option to their customers, which made it harder to sell ads on iOS devices. And since American citizens' majority have at least one iOS device in their households, it's a massive hit for Meta. Let's just take a look at this statistic from Meta itself. Basically, even though Asia is the biggest market as per sheer volume of users for Facebook, Meta are generating more than 12 times more revenue for every US citizen compared to an Asian citizen on average. And just to take a moment to analyze this two diagram just shows how important the US market really is for companies that are solely rely on advertising revenue. Now, whether if this drop was justified is really hard to answer. You have to keep in mind that future growth forecasts are already priced in the market. This is why Tesla has such a high valuation, for instance. If these growth estimations don't match the reality, the stock price will eventually fall. Although I'm not too certain whether the 25% drop in a day was justified, only time will tell. And just to finish off this video, I think this is only my opinion, but if this exact same Q4 earnings report came, let's say, instead of this year's Q2 or Q3, I don't think there would be that big of a fall or drop of any. And why is that? Well, I think fear increased substantially in the last couple of weeks in the market, and it feels as though we are on a knife's edge. But keep in mind, even if there's a bear market to come, keep your head up, play for the long run, and you will probably be able to come out profitable. This is my very first finance related video. I hope you guys enjoyed it. I would highly appreciate a couple of likes and subscribes. Peace.